You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again. It is Friday. It is time to view a little bit of volatility. It is time, of course, for Volatility Views, the premier program for volatility traders. My name is Mark Longo from the optionsinsider.com, as well as from the network upon which you've been hopefully mainlining all week long. A lot of great content coming at you throughout the week. If you're just listening to Vol Views, I know there's a loyal Vol Views contingent out there, has been for a long time. If you're just listening to Vol Views, though, man, you're missing out on so many other fun things. Options Bootcamp, we went deep this week into all that madness with Lyft in the after hours and what can you and can't you do from an options perspective. Of course, the option block yesterday with the Flowmaster, getting into all that fun on the Feb 17s and VIX. Spoiler alert, may touch on that a little bit today as well. And then, of course, Twifo had a great time yesterday talking about nat gas and crypto and everything. Monday, of course, the OB Crypto Rundown had a good time as well. Pro Q&A with our buddy, Mr. Overby. A lot of great stuff hitting the network this week, so check out the full network. And then, of course, for the pro stuff I mentioned, like the Pro Q&A, and if you want to come back after Vol Views today for a little bit of extra fun with options oddities, only one place to go. The optionsinsider.com/pro is the place to go to learn more as we go around the horn and see who's joining us on the old program today. First, let's go out to the dark, the stormy, some might say hellacious this time of the year or all year round shores of Maine, where we are joined once again by the rock lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to Volatility Views, sir.
It's good. I mean, I only come here like once a month, maybe if I'm lucky. So and then we got some special guest you hauled out from 2023. So we have an exciting show coming.
We have an exciting show indeed, because also joining us for the first time this year, he hasn't been on Vol Views since October 20th of last year. He is Rich EXCELL, professor over there at the U of I. You've probably seen a lot of his fun analysis and charts, his excelling with options. Does a lot of that over there at CME as well. Rich, welcome back to Volatility Views for the first time in this new year, sir.
Yeah, I'm looking forward to it. This is exciting. I know we've been talking a lot about it. A lot's changed, a lot maybe the same since I was on last. And Andrew, it's good to meet you via the show. I'm looking forward to the discussion today. You
picked a good week, Rich. A lot of vol popping off this week. So let's get to it. A little bit of the old volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show we break down the week that was and indeed still is from vol trading and trending and analysis and all sorts of fun perspectives. And coming into the start of the show, as we were talking about before the show there, it was a little bit of meandering going on with the markets. We had a little bit more inflation data popping off this morning. It seems like the market now having some time to digest it and not exactly loving what it saw, even though we're not exactly blood red, but we are red across the board. S&P was kind of hanging out green to a little bit unched before the show. Now most of the indices are heading into the red. S&P off 0.2, Dow off about 0.2% as well, NASDAQ off nearly 0.5%. And you know what? Because we were talking so much about small caps yesterday on TWIFO as well, and it is very much the story out there these days. Let's see where our old buddy small caps are hanging out right now. Off about not quite a full percent, but pretty darn close, about 0.85% as well. So as is the case these days, small caps like to see what the other indexes are doing, and then I'll raise you 2x. It seems to be their MO a lot these days. Or they just do completely their own thing, regardless of what else is going on with the rest of the market. So a fascinating end to a very fascinating week. As we kicked off the show, VIX was at a 1380, up about a point. We'll see where it is when we end the show. If the worm is turning again, then we might drift higher. Of course, we are heading into a long holiday weekend, so that's also going to weigh on vol. So a lot of conflicting forces at play here at the end of the week. And our old friend VVIX kind of giving up all of the juice it had earlier this week and indeed last week. It's at about an 80 even coming into the start of the show today, down about 5 points. So a lot to unpack. Maybe the worm turning again here. Is that enough to offset the weekend already coming out? I guess we'll find out. Let's go around the horn. We'll start with our guest. Rich, before we get to all the action I was just talking about this week, as I mentioned at the top of the show, this is your first appearance with us for the new year here. Still the new year. We're only halfway through February, so it's still a new year to me. I'm still writing 2023 on a lot of my papers and things, so it's still in that zone for me. So Rich, when you look back at the very interesting year that was 2023 from a vol perspective, what really stands out? What resonates to you, sir?
Well, I mean, I guess the one thing that resonates to me is how we didn't really have a lot of vol, to be honest with you. And I think when I was on here last in October, at that point, I think I was really focused a lot. And I think I remember saying I was expecting higher vols the following week and the rest of the year, actually. Because to me, when I look at the volatility markets, it's always a liquidity thing. It's always not liquidity in the options market, but liquidity in the plumbing of the economy and plumbing in the market. And when that liquidity is flowing, when there's a lot of money flowing into the markets, vol tends to be dampened, right? But when that liquidity starts to get taken out of the markets, that's usually when we see things start to break. That's usually when we see more volatile markets. And at that point, September, October, that's what I was thinking we were finally starting to see. We saw some glimpses of that earlier in the year in March with the banks, et cetera. Thought that was about to be the case. But then, then the Treasury turned around in the end of October, changed everything in the refunding announcement, and then sterilized a lot of what the Fed's doing and just flooded the market with liquidity. And we saw this, we saw the impact of that, right? We saw expectation of rate cuts priced in pretty aggressively in the last couple months of the year, and we saw everything. It was the everything rally again. I mean, it was one of the most epic rallies you'll ever see, I think, across risk assets, but across risk-free assets too. Bonds rally pretty aggressively. I think we're seeing a continuation of that, if you will, in terms of the financial conditions still getting easy, still moving higher. But that's we can talk about what could happen going forward. But I know you mentioned the kind of the small caps there. The small caps had a really nice move at the end of the year. I think there was some seasonal behavioral things going on there, but ultimately, until that last couple of months of the year, small caps were miserable, right? They were, while everything was going to new highs, small caps were negative. And we're still seeing small caps down this year, even with the market back at all-time highs. And I think that to me shows me that small companies, small businesses are still really struggling out there because liquidity has been taken out of the market. So I still think that liquidity drain is going to cause more vol here at some point. But we just right now, the last couple of months has just been easier financial conditions leading to low and lower volatility, and something's got to break.
Yes, you're right. Small caps very much an interesting story. The last quarter, even the last few months of last year, kind of just taking on a life of their own. But that said, fast forward to this week now, Mr. Rich. Like I said, you picked an interesting week to come on. We've been kind of lamenting the lack of any real serious upside in VIX land for a little bit here on the show. It's kind of been drifting lazily between, the 12 and 13 handle for a lot of these shows we've been doing lately. Then all of a sudden this week's come along, we get a pretty hot inflation number, and all of a sudden vol's popping, VIX cash spiking to around 17.5. Things are moving, things are shaking. So you picked an interesting week to come on for the first time of the year. Mr. Rich, what caught your eye out there this week?
Definitely the inflation. I mean, I think that was that's brought it back squarely into focus. I think the market was hoping that inflation was behind us and we could focus on growth. And since a lot of people were seeing better growth, they're like, it's all good. And I think the CPI earlier and then the PPI today have really kind of heightened focus again back on that inflation idea. And when inflation is moving higher, if we fear inflation moving higher, the problem is portfolios are not built for that, because in higher inflation worlds, stocks and bonds are positively correlated. In low inflation worlds, they're negatively correlated, which is how most people build their portfolios. And so I think that causes some concern. Now, we haven't necessarily seen it so much this in a holiday, essentially kind of a holiday shortened week. Most people I talked to were already getting on planes by lunch today, I guess. But I think that this, to me, the CPI and PPI, we saw the reaction in the front part of the interest rate curve. You look at the move in 2-year yields. I look at that, and that tells me that earnings multiples are going to have to start coming lower, and the rally we've seen in stocks has been entirely from multiples and not really from earnings, with the exception of a handful of stocks. So I think that there's signs to me within that inflation data that we might be seeing more interesting 2 weeks, maybe even 5 weeks into the next FOMC meeting.
Yeah, you mentioned that data coming in hot again this morning. Of course, CPI came in hot earlier this week. Listeners, now PPI, as Rich alluded to, coming in hot this morning as well, rising 0.3% for the month. That's the largest we've seen since August. Most of the economists surveyed have been looking for about 0.1%. So obviously a big jump there. We were kind of talking before the show, maybe a little bit of a surprise that it didn't derail the market in a similar fashion to what we saw with CPI. Maybe one of those things, you just got slapped in the face a couple of sessions ago with similar type of data. Maybe you're already kind of a little bit prepared for the next shock to come. Either way, but again, it looks like the worm might be turning out there now. It's maybe a little bit of a delayed reaction. Really quickly, Rich, the question I've been getting from some people this week, I want to put it to you as well, is what are your thoughts on the VIX move this week? This is the thing people like to judge now. Post 2022, post the year that VIX was quote unquote broken. Nobody liked how VIX performed in a year that the market was mostly selling off. They thought VIX wasn't really doing its job. So everyone likes to look at the moves it makes in these sell-off weeks and see if it's appropriate. We spiked up to around 17.5 into cash. What are your thoughts? VIX doing what it's supposed to do, underperforming, outperforming? Where do you fall, Rich?
Well, I'll tell you where I fall. I mean, I think we have the VIX, to me, always tells me maybe in some ways the nervous side of the market, right? And historically in S&P 500, the nervous side is always the downside of the market, right? So that's why we have that negative beta and a very sharp asymmetric negative beta. However, what we've seen in the flows this year is that there's really no demand for downside options. We've seen the skew of input options versus the at the money as at one of the lowest levels we've seen in 20 years. Conversely, we see the discount, normally obviously calls traded at discount, that discount has collapsed to one of the lowest levels in 20 years. And so when we look at that, tells me the nervous side of the market in some ways is the upside of the market, right? It's the FOMO market. People are maybe invested, maybe they're using call options as a way to get some exposure to the market. So I think, to me, I think markets rallying on news that you think should take it lower probably makes people more nervous than if it actually did what it was supposed to do. I don't think people are hedged for the downside. I think they're really all in on this move on the market. But I think that what was kind of maybe you could be construed as confusion is that I don't look at the VIX as a fear gauge. Well, it is a fear gauge, but it's a fear gauge of what people are worried about. And I think a worried is that it moves higher and they're not invested enough.
Yeah, it's something we were talking about yesterday, specifically with small caps. We were actually analyzing some of the near-dated skew out there. And listeners, you can see this for yourselves if you go over to the cmegroup.com/TWIFO reports and just go to small caps there. All the near-dated contracts. So you're talking the 0-day stuff, but even going out 6, 8, 11 days, all the upside is bid. You're seeing a bid to the upside in the Russell 2000, which is something, again, you don't typically see in a major index, any sort of bid to the calls. So yeah, things are getting a little funky out there right now, listeners. Speaking of funky, let's go out now to the shores of Maine where things are always funky. Mr. Rock Lobster, like I said to Rich, a very interesting week out there. Things getting spicy on Tuesday, then kind of calming down a little bit. And looks like, I don't know, maybe they're going to get spicy again today. Bit of a delayed reaction out there, but intriguing stuff nonetheless. We also have this weekend, long weekend, weighing on vol as well. So two very much juxtaposing forces at play out there in the market today. What was catching your eye out there in another wild vol week, sir?
Well, we did have that. I love the show with Henry yesterday. So for people that didn't listen to it, they should catch the option block we did yesterday. I thought that was a fun show because Henry had a lot of good tidbits for us in that show. Namely, Mr. 17 level call buyer with his 360 jillion calls that actually had a shot on Tuesday, as I recall. So that caused at least partial of that parabolic squeeze in VIX on Tuesday. So I thought that was, and literally as fast as it went up, it totally came back again. So as we just alluded to here, the bid for volatility is just not huge. However, since Option Pit does have a proprietary fair value indicator for the volatility market, it works a little differently than other ones, I think. But basically, we measure how unstable the forward vol relationships are. So basically, when the market is this kind of, what we'll call this happy bullish phase, VIX is around 12, and there is what I would call a statistically normal amount of contango in the futures. That's what I would call a benign curve, right? So realized vol's super low in the front. We kind of meander around a little bit, and you have, that predictable decay out of VIX futures for a period of time. The vol products get smoked, and you and I are all laughing to the bank buying puts and UVIX and stuff like that. That's what I would call a normal market. And then, of course, every other time that's not like that. So anytime we deviate from what I would call like benign sentiment in the front end, our little curve gets red. It flashes a red blinky light for us. And right now we're still in that. We are still in the red blinky light stage for futures. So that means what? That means that short-term volatilities are a little flatter than normal, a little more backward. The forward vol's a little kinked up in the front. So there's still like, they might not be bidding for the downside skew, but they are bidding for gamma, I would say, from the money. Like, so, you could buy volatility in different places. You could buy out of the money puts. You can buy at the money. You can buy out of the money calls. You can do combinations of all things. So, I measure, what I'm always interested in measuring is everything from the money. That's how I did it. And now you learned how to do it when you're an SPX trader. I don't know if it's changed or not. I haven't traded an SPX pit, but I assume they're just much more sophisticated at it now. And that's how you measure. So right now, I think there's still like somewhat of a bid for at the money vol relative, at least the way I measure it, because your close to close vols are not that high. We're still like 11, 10% in SPX. So, VIX at 14 is non-trivial, right? So there's premium in the market for options, like a pretty decent amount, I would say. Yeah. 10-day vol in SPX is 1162, 30-day vol is 1115. So and we had this week, we had that huge swing down, huge swing up. So there is some, the traders are not really, at least from a liquidity provider point of view, nobody's coming in there and pounding those options down near the money to keep, to actively sell that vol. So I think the inflation, I think people wanted a better inflation story. They didn't get a better inflation story. You and I and Tusaw and Mark have talked, like, how are they going to cut rates when is inflation really going down and there's government spending tons of money? Like, I don't see how it's possible when the left hand doesn't talk to the right hand. It's like Powell's fighting his own battle by himself there. He's like the only guy in the shield wall, He's like, where's everybody else?
Doesn't work that well in the shield wall with just one.
Just one.
That is just a shield.
It's him in the front, and all the guys in Congress are like 200 yards back saying, you do it, Powell.
Yeah, you take care of that.
Go out there, man.
You go.
You take them out. So, and I just think, we're running just enormous deficits for like what? Why are we spending all this money and what are we getting for it? But anyway, that's a whole nother subject. Just the fact that it's happening is going to make it harder for inflation to come down. There have been some really good earnings, and I would agree with our guests here that like the small cap, what I would call Main Street earnings, not that great. I mean, they're making money, but you're not seeing killer earnings growth. You're seeing killer earnings growth, I think, in chips and A and like this, in what a kind of a narrower part of the market. Banks are making money, oil companies are making money. But I think more businesses that are hurt by inflation than are really gaining from it, contrary to the press. So as of right now, I have a nervous volatility curve. That doesn't necessarily mean we go down, right? But I think it's reasonable to assume we're going to see a little more volatility next week than the lower realized vols implied. I'm more of the camp of siding with VIX and a bigger move in SPX than, basically the trend we've had over the last 30 days.
Indeed. And I'm looking here. The numbers are flying around a little bit on my screen, so I can't see all the names. A lot of people in there, but I do see, the second you mentioned his name, the Flowmaster did pop into the chat. So you invoked him, sir, somehow. So be careful. He heard you. His ears were burning. He heard you talking about him, talking smack. So
Henry brings good goodies. He knows it. He knows his goodies are good.
He does have some pretty decent goodies out there. Let's see what else we got cooking on here. Maybe we got some good goodies of our own here, listeners out here on the show. Let's go out to the land of the VIX futures first, where I've said many times on the show, the answer to all of your volatility questions lies. You just have to be able to find it somewhere in there. And coming into the start of the show, spoiler alert, things are still a wee bit up from where they were this time last week. We are up a little over a point, about 1.12 points in the Fed future. Again, that one kind of going the way of the dodo pretty soon, so I don't pay as much attention to that. Going up a little bit to March now. That one up slightly when we kicked off the show, up about 1/4 of a point. Of course, if this trend continues here, if we're seeing more sell-off continue out there, then perhaps we'll see that continue. Of course, if this sell-off mitigates, then that juice is probably going to vanish pretty quickly into the teeth of a long holiday weekend. Mr. Rich, I know you spent a lot of time parsing the world of the futures. What's catching your eye out there on the volatility surface this week?
Well, I think when I look at it, I like to kind of look out a little bit further, because to me, the with that inflection point as we kind of move March, April, that to me is the most interesting period. And so I think that that's where I'm thinking that's if we're going to have an inflection, we're going to have a kink. That's where it's going to happen, and so that's what's driving me. I think that's where we have a lot of catalysts as we kind of go into March. We have a lot of kind of things that we're lapping, events we're lapping, programs are lapping, et cetera, and that kind of catches my eye. And as I think about this year, I talked before about the liquidity. For me, a major forecaster of where the VIX is going to go on a smooth moving average basis is just looking at the yield curve. The inverted yield curve leads by 2.5 years of what the VIX is going to look like. And as you know, we've been inverted for well over a year now. So actually, so I look at 2024, especially as we kind of get to the middle to the later part of it, and thinking that this, from that liquidity standpoint, it's going to be we're going to see more and more problems, and that therefore higher volatility as the year plays out. And I think some of that could kick off in the spring with new dot plots, March FOMC, expiration of the bank term funding program, going into the next round of earnings in April, et cetera. I just think there's a lot of interesting places kind of going on there.
Yeah, this curve does give me the heebie-jeebies. I've been saying that for a while now. I was looking at it. They were kind of eerily reminiscent of what we were talking about this time, 4 years ago, early 2020. In fact, this time exactly almost 4 years ago. On Valentine's Day in 2020, VIX closed at about a 1370. We're at a 1380 coming into the start of the show today, listeners. Of course, before all the COVID madness happened back in 2020, everyone came on the network, everyone came on Volviews, just completely obsessed with that kink you were just addressing there, Rich. That little kink around the election. Everyone was saying that was overdone, it was overpriced, we need to sell that and buy some other months and spread against that, and that was all the rage. Of course, Valentine's Day came and went, and things started happening. And within 2 weeks, VIX was at a 40. A couple weeks after that, it was at a 60. So, yeah, I'm not saying we're going to see a repeat of that, hopefully, listeners. But still, does give me some eerily reminiscent vibes of what we were looking at this time 4 years ago. Mr. Rock Lobster, same question for you. What are you seeing out there on the vol surface this weekend? Is anything about what you're seeing out there right now giving you the willies, giving you the heebie-jeebies, sir?
Yeah, I have to say I have a little heebie-jeebie. So, I tell my students, I wish the VIX curve would have been around when I was a floor trader, because it probably has the best information anywhere, right? Because it takes the forward vol surface and it gives it to you in an easy two-dimensional package.
Wait a minute. Are you saying the abstract at the money vol of the OEX was useless for you? How dare you, sir?
The problem was looking at it, right? In the old days, it wasn't easy to poke around on a quote to get the at the money vols. Your company would, we did what's funny is we did not organize, even with Group 1 in the mid 2000s, as late as I was there, we did not organize volatility that well, horizontally. Anyway, it's something I've picked up in my old age here. But anyway, I would say right now, though, you have the March future relative to the VIX cash in this part of the cycle with this many days to go. VIX cash is relatively high to the future, which means the forward vols for March are a little low, which means all the short-term vols in SPX are higher than I would say historically normal. So that's all that means. So when you have compression of the curve, that means, I know it sounds counterintuitive, but that's how forward vol works. So all the short-term vols are a little higher than normal, which means traders are not they are not buying into the benign lower vol, lower realized vol. There's nobody as aggressively selling it. Now that could be because they think we're going to take off for another 1, 2, 3, 4% in the next, 2 weeks or a week and a half. They're not letting the vols at the money are not relaxing enough. Because when you go straight up is still, it's kind of sneaky low realized vol, I call it. If the market is up 100 points in SPX every 3 or 4 days, volatility is not going to come down because, even though the 30-day straddle is $110 or $120, if you're moving $110 every week in the same direction, 4 weeks later, your straddle was $300 underpriced. So the vol is not going to come down, and that's kind of where we find ourselves. You got to be realistic. You're at an all-time high in SPX, and the VIX bottom was in December. So we have had 2 months of, we're at near record close here, and VIX is 1.5 points higher than the low, or let's say 12 was about. I think we just traded 12ish. So it's almost 2 full points higher than where it was 2 months ago. So that's telling you that we moved probably too far, too fast. again, it doesn't matter. I'm not in the business of shorting the market at all aggressively. But vol is higher with SPX higher, which is, is generally that's kind of a broken anti-correlation. So as long as it stays like that, I'm gonna, I still try to have some downside, but I have to say, like January, February, any volatility money on short vol got burnt on the SPY puts that I bought against it. So it was not a great January. The cycle was it was a treading water cycle for me, to be quite honest. Didn't make a whole lot of money because my SPY puts, every time I had a chance to sell them, I kept invoking Fred Sanford, like this is going to be the big one, and it didn't happen.
But you had the sweet VIX strangles this week, I'm sure. So those calls did all right for you.
Oh, the VIX. I mean, the VIX paid, but I generally have, like when we're in contango, I keep, short VIX, short SPX, and the short VIX was paying, right? But the VIX strangle is one type of trade, and then the short is another type of trade because I want that gas from the SPY put. But I did not sell I've sold some SPY puts last week when we had a couple of drawdowns. But for the whole month of January and beginning of Feb, I didn't sell any. Anytime they were up money, I didn't sell them. Because they were up a little bit, but not enough to get me excited. And they all went out worthless. So this was probably the first full cycle where I had expiring puts every week, expiring every week. All of them are dead. Last year, obviously that wasn't a problem because there was enough up and down in the market that you SPY puts would pay, but not this cycle. So I just, is that a symptom of we're at the top? Am I going to do the same thing again? I'm spending less money on the SPY puts right now. And I'm flipping a little bit to more long VIX, long SPY as a trade going through this cycle, just because that's where we're going. And there's not, frankly, there is not enough in the curve to like VIX puts enough like I normally do. So there's just not enough to feast on. When the future and the cash are almost at the same price, VIX calls are a better deal relative to other things. So I would rather buy those and get long SPY, like SPY call calendars, and still have like a positive theta with positive expected value profile for the trade. But I'm not as hungry to buy VIX puts as normal. I think the strangles could work. But you could see you have to trade them. Like you had that pop. If you didn't sell your calls in VIX,
you had to be on that one. Yeah.
Yeah, you had to be on it. Like we talked about, you had to have offers in and they had to be swept. So, but will there still be opportunities? Sure. Yeah. But it's not the same. I'm not running my vanilla bread and butter trade that I normally would when we have the steep contango. Just because it's not. I'll be smarter to take my SPY puts next time when they pay. Let's put it that way. But the thing, like I'm going to make $50 on a put, and I don't take it. Now I take it just because the sell-offs don't last very long.
I lamented not having my VIX upside this week, but you know me, Mr. Rock Lobster. My luck, the exact moment, which I think it did happen actually, of the exact apex of vol was, of course, during a show. So I'm not hitting bids. I'm not chasing the VIX back down. Of course, I would have missed that, of course, and then I would have been on here lamenting just like you. So there we go.
Yes, your schedule does preclude you from exiting certain
people
trades.
think I'm slinging all the time. I focus on the shows for you listeners. I cost myself money so you, the listener, can have a better product. Rock Lobster's got dings going off. When I got Dan on here at boot camp's got dings going off in the background all the time. Not me, listeners. I'm focused on you folks, to my own detriment often. My wife gets mad at me. What are you doing? But hey, you know what? You listeners have to come first at the end of the day. As we keep on rolling into the land of VIX options, is it a banger day out there? PPI, you might be expected for, hey, maybe we got a little bit of juice, a little bit of action out there. And the answer is, not really. Long weekend as well. Maybe people are already taking it off. I don't know. Whatever's going on out there, not a lot. 202,000 contracts on the tape. The ADV, though, looking a little bit more robust this week, listeners. It is up to 766,000. That's up a fair bit. It's up about 114,000 contracts from this time last week. So you get a day or two with 1 million plus contracts. That'll do it. Rolling on into the top 10 positions. Obviously, we saw some VIX options rolling off the board since our last show. That's kind of shaking things up a little bit, which is nice. We needed a little bit of a shakeup in our VIX top 10 because that now opens the door, opens the kimono, if you will, to a few more puts sneaking in. I know a lot of you have been waiting for that. It's not a put palooza, don't get too excited, but we have 2 now. We were all excited to have 1 last week, so now we have a whopping 2 puts in the top 10. What are they, listeners? Well, stay tuned to find out. Spoiler alert, you don't have to wait too long. Number 10, 184,000 of the March 14 puts kicking us off out there this week. Followed by number 9, listeners, 186,000. Right back at it, Feb 60s. Here we go. Right back at it, listeners. And number 8, 187,000 of our second and final put in our top 10. Again, told you, don't have to wait too long. March 14 halves. So if you don't like the March 14s for whatever reason, not maybe meaty enough for you, allow me to present the March 14 halves. 187,000 of those bad boys for number 8. Number 7, 200K exactly of the AUG 47 halves. So we had a funky April AUG 47 half deal going up here this week. Maybe we'll get to that a little bit later. Number 6, 206,000 of the May 60s. So 60 strike back in action, listeners. Number 5, 211,000 of our old friends, the March 47 halves. We've been talking about this for a while. This funky 1x5 that they keep doing here. You think it's usually 20 or 22 by, I think it's 20 because looking at all the open size there. 20 by 47 half, 1x5. We were talking about it last week with Steve on the show. We've been talking about it for a while. There's so many things about it that I just kind of laugh at. The strike selection, the ratio, all sorts of things about this one. But nonetheless, it is dominating our top 10. We have the AUG 47 halves at number 8, now number 5, 211,000 of the March 47 halves. And that's not enough. Number 4, 224,000 of the May 47 halves. So pick your month, pick a 47 half strike. Chances are it's got size thanks to our 1x5 friend. Number 3, 234,000 of the March 17s. A strike we are all familiar with back with its Feb saga. We'll get to that in a little bit. Maybe playing that game again in March. Number 2, 254,000 of the April 20s. And the number 1 big dog in VIX right now, listeners, 353,000 of the March 20s. Now, I mentioned the March 17s. You'll notice, of course, our friends, the Feb 17s, rolling off the board this week. We were talking about them on the show last week. Seemed like they were going the way of the dodo. And again, as the Rock Lobster alluded to, our buddy the Flowmaster did a great breakdown of this on our option block show yesterday. So check that out if you haven't. I'm kind of run through the bullet points here for you listeners. But of course, they opened this trade back on January 12th, was the largest block call print in VIX options history, about $250,000 or so going up for these things. They paid about 67 cents for these, as I recall. And they look good pretty quick. On Jan 17th, they were trading $1.01. So printing over $1. So it looked like a decent trade. Obviously, they have something else against it. But from just the options lens that we could watch, that side was looking pretty good. Then things started turning around. Vol went nowhere fast, and they were getting annihilated on the Vol side of the trade, on the option side of the trade. Going into our show last week, these options were trading for 11 cents. So this was just money out the window. They were looking terrible. Then, of course, this week came along. Monday, not so great. Tuesday, bam, CPI just shooting a whole new injection of life into this trade. VIX spikes, vol pops, these options, these Feb 17s go from being worthless to printing. They printed up to $1.27 on Tuesday. So you're looking at about a 2xer on this bad boy, pretty darn close to it. Now, they only printed small there. Someone actually got 2,000 of these off for $1.27, which VIX was 17.73. So I tip my cap to that person. They pretty much called the high. And that was all they got off of that level, listeners. They still had a bunch open is what I'm getting to. They didn't dump them all at $1.27. That would have been great. But alas, they did not. That upside was short-lived. We just talked about it with Andrew. You really had a few fleeting moments in the sun there, north of $1, and then that bid vanished for those calls. They ended up closing those calls at 42 cents, so still a lot better on Tuesday than they had been on Monday, but nowhere near a third of what they were just a few hours earlier. And they didn't, only about 100 some odd thousand traded that day, but if you look at the volume the lion's share were going up 13 cents, 14 cents. So if they were dumping some, they didn't get them off for great levels. And they didn't dump enough because there was still about 328,000 open going into expiration. So long analysis cut short, listeners, they had a chance. They had a brief chance. Now, it's going to be hard. Things are going haywire. You're not going to get close to 400,000 of these things off at that time frame. Probably not. That's not very realistic. You have to go out and negotiate that trade, obviously. Maybe someone's willing to take the other side when things are popping. But again, you got to catch the exact moment. But they probably could have gotten some of these off for a pretty decent level. And it doesn't seem like they did. So they had a chance to really monetize the hedge portion of their trade. And it looks like they failed. So that one, a bit of an ouchie out there. And again, even more stark when you see that they had a brief shining moment in the sun right before it all went away. Just makes it that much more apparent, listeners, that you have a hedge, and when it does something for you, you have to monetize it. Otherwise, you spent money on it. Take it off. Yeah, so that was a painful one. Let's get out to this week, listeners, and see if you have any more pain out there. Again, if you want a deeper dive into that, check out yesterday's option block. The Flowmaster did a great deep dive of that. This week, like I said, not much going on today, about 200,000 contracts on the tape. The big dogs are kind of already coming up against it. We're having fun here, so I'll kind of skip through really quickly. Got 19,000 of the March 17s lighting it up today for the big dog. Yesterday, a little bit more paper, almost 700,000 contracts on the tape. We have a May 60s. Again, that's what we're just talking about. May 60s going up 103,000 times, followed by 100,000 of the April doubles yesterday as well. Opening on the 60s, maybe not so much on the doubles in April, which is kind of interesting. And that's kind of the big print for yesterday. That's 200,000 of our nearly 700,000 yesterday. Wednesday, a banger day, the banger day of the week, 1.25 million going up out there, leading the dance on Wednesday, 100,000 each of the April 47 halves and the AUG 47 halves. And now you look at that, you think, oh, they just rolled those, but obviously dig a little bit deeper. It looks like they did our 1x5 against. I'm not sure if they were rolling. Again, I can't tell of either of these if they were closing or not, but it'd be a weird time to roll your April to August, but we've seen weirder things, unless they're just putting on more because they like it. By the way, we saw the AUG 22 47 half, 1x5 going up against the April 22 47 half. Again, 20,000 by 100,000 times. So you're talking 240,000 contracts just in that one trade. So a pretty action-packed day. Outside of that, the big dog was 59,000 of the March 14 puts and 55,000 of the March 13 puts, and round out the top five on a very active Wednesday, 47,000 of the April 15 puts. Going out to Tuesday, obviously some options rolling off the board, and that one was a pretty big banger day as well. 2.25 million contracts on the tape. The big dog on Tuesday, obviously you're going to see some Feb action on Tuesday. 143,000 of the Feb 20s. Didn't hurt that we also had a nice pop on Tuesday as well. So kind of a double whammy heading into expiration and also having this big move. And then, like we said, 140,000 net of the Feb 17. So they did trade, but obviously not enough to take off the size that they had. And also, the lion's share of those weren't at $1.20 or even north of $1. The lion's share of those were well shy of 40 cents. So, yeah, it wasn't exactly the banger trade that it could have been. And then number 3, 118,000 of the Feb 16s. Number 4, 79,000 of the March 40s, 4-0s. And rounding out the top 5, 77,000 of the April 22s. Monday, no slouch either, 797,000 contracts on the tape. The big dog, 71,000 of the March 21s, followed by number 2, 47,000 of the Feb 15s. Number 3, 45,000 of the March 17s. I could go on, but we got more to talk about here. But before we do that, Mr. Rich, I know you pay passing attention to what's going on out there in the land of VIX options. First off, were you aware of this ongoing saga that was going on with the Feb 17s? Kind of hard to miss it. It was an enormous print. Everybody was talking about it. What are your thoughts on this kind of so close, but not close enough, apparently? And then anything else catching your eye out there in VIX options this week?
Yeah, I was mildly aware of the Feb 17 saga, but it's fascinating. And I think you're absolutely right that you have to monetize that hedge. That's why you put them on in the first place, right? At least roll it, do something. Doing nothing doesn't seem to be the right strategy. And so I think that's interesting. I will tell you though, that I've got to be tuned in more. I was not aware of the 1x5 that's been going on here. And that's really kind of stoking my interest. And so I want to look more into what's going on with that.
God, it's polluting the VIX now. Every month, the 47 halves, you can't get away from them. Size open on every month now. So, yeah, they have some interesting strike selection. Let's just put it that way. But yes, the 1x5 for size. Pick a month. Chances are it's open for size. Might be a good question of the week out there as well. Do you like that 1x5? Somebody does. Somebody keeps it up. Mr. Rock Lobster, same question for you. We already talked about the Feb 17s yesterday on the option block. If you have any final thoughts there, you can feel free to add them. Then, of course, anything else catching your eye in a pretty action-packed first half of the week, then kind of a quieter second half, sir?
I mean, yeah, 17 calls, definitely that was the all-time excitement. And how close they got. But as far as, VIX options right now, there's a little bit of interest now. I'm seeing some open interest starting to pile up on the 13 put at 24 cents, not very expensive. I can't imagine that you won't be able to sell those for a higher price at some point in the future, but I'm starting to see that, on a relatively quiet day, that put is around the money is sort of leading the volume gain. I'm starting to go up a little bit more here for the March cycle, and okay, there's some 17 call action. I thought the 17 calls were cheap for $1 a couple days ago. And now the 15 call is the same price in March. 15 call at $1.10. I'm just saying, if somebody's worried about a crash, they ain't doing it in the VIX, because that is like VVIX got to be in the 70 hand. It's got to be in the 70 handle.
It was 80 when we kicked off the show.
81 a second ago.
Yeah, it might have dipped into the 70s now as we've been doing the show.
Yeah, it's 80.76. If it holds the 80s through the end of the show, I will be amazed. So yeah, I think, again, I like using options for leverage. I like building paired type trades, VIX and Apple, VIX and SPY, VXX and Apple. I don't care as long as it looks tasty to me, where you can see something that can kind of fly. But I also like options in VIX that are $1 or less around the money when they get that cheap. So, your creativity, you're only blocked by your creativity, but those are very, very, very inexpensive options in my view. And they're probably going to go out worthless. So you would need to have another trade, actually part of the trade that will really be making you bucks. But I love the long VIX, long SPY trade right now. I'm not going to lie. Just the pricing is just too good. And the good thing about a 15 call in VIX is if we have any kind of a shock, a real shock, that $1 call can go to $5 in a heartbeat. So you can do a lot with it for the next month. So it is a price performer if you're looking for that kind of a trade.
We talked about it before. Historically, last few years have been kind of Weirdsmobile, obviously, but historically, when VVIX starts to get around 75, that's when things maybe start to happen. We kind of, outside of 2017, when all vol went to die, that's when usually it tends to revert. You get a little bit more juice out there again. So, we're not quite there yet, listeners, but we're starting to threaten those levels. Intriguing stuff. Let's keep on rolling out to the land of the VIX ETPs. Man, we're already coming up against it. We're having fun on the show today, listeners. Get out there to SVIX. SVIX 3960 right now, down about 1.4 points from last show. Today, about 3,600 contracts on the tape. The ADV is about 3,600, so not much really to look at out there. The big dog in SVIX right now, March 45 is about 3,000 of those. Let's keep going on to UVIX. This is kind of a little bit more interesting. UVIX 1080 right now. Obviously, it's spiked higher since our last show. It's up about 0.4 of a point right now. Doing a little bit of paper today, 9,200. The ADV is 14,000 right now, up about 1,000. So having a decent week out there. But like we just talked about the Feb 17s, I want to draw your attention to this trade we've been tracking for a while here in UVIX. This is, of course, our old friend, the 20,000 lot of the April 12s. That is still the size open position out here in UVIX by a country mile. It's 10x the next closest thing, almost exactly. So they bought these for $2.70 back on January 26th, I believe. And they closed going into our last show around $2, so they were already kind of wearing it on this trade. We said then, is like, you got to really be convicted to shell out for a lot of upside in UVIX. And when you have a move, you got to kind of act to monetize it. I mean, we talk about that with VIX all the time. UVIX, even more of a wasting asset. They had their moment in the sun this week on Tuesday. These options closed at about $3.74 on Tuesday night. And now, like I said, UVIX back around 1080. So that's all gone now again. So yeah, another one where I'm not saying you have to take all of it off, because obviously you're probably prepping for something pretty big if you're buying the April 12s, but maybe you sprinkle a little to make some of the pain a little bit less when all this erosion inevitably goes against you out here in a product like UVIX. So this is another one, Feb 17s and now the April 12s. Both of them had a moment. Obviously, April, they got a little bit more room to run, so it's not quite as pressing, but still a similar saga maybe playing out here as well. I'm curious for you folks, listeners. If you were along sides of these April 12s, you had bought them for $270, you were already kind of wearing it, now you had a moment, not just breaking even, but actually making about $1 on these things. Would you have taken some off? None? Would you have ridden the beast into the grave? I'm curious. Hit us up, let us know. That's what they did out here. And then, of course, UVXY 7 1/4, a.k.a. Mr. VIXologist's favorite product on the planet. He and the Meatball had a fun little back and forth on Twitter because the Meatball threw him under the bus for no reason on the show last week and then tweeted about it. He was very proud of his handiwork. So a fun GIF kerfuffle ensued, which was pretty funny. But 7 1/4, up about 1/4 point from last week. Today, about 100,000 contracts on the tape, the ADV 103, so unchanged there. VXX really quickly as well. Let's run through them all and get everybody's thoughts. VXX 1420, up about 1/3 point. 53,000 contracts on the tape, the ADV 66,000, so down about 2,000. The big dog in VXX right now, 29,000 of the March 14 puts. Mr. Rich, I know you pay attention to the VIX ETP universe. Which of these is catching your eye out there this week? And what are your thoughts on the size April 12s? Would you have let some of those go, or would you still be riding those bad boys right now?
I absolutely. Well, I'll tell you what, Mark, my favorite way to do that is, let's say it's a hedge against your portfolio, maybe credit portfolio, whatever you have it on against. You got to roll them up to a higher strike. Even if you think this is the big one, do it on a 1x2 basis, but take a little bit of premium off the table. I think you just have to take some premium off the table because, you know that it's maybe not just selling them outright, but like I said, I like to maybe roll into a higher strike 1x2, take a little premium off. I still have some exposure if it's a hedge, but if it bleeds back down, at least I took something off, and it makes me feel a little better. The odds are it is going to probably bleed back lower, as you said. It's this is definitely a waste and asset, instant gratification idea. The fact that they're using it for the pure asymmetry tells me there is probably, they see it as a cheap hedge on the other side, but you got to be active on that. You can't hedge your book passively, right?
That you cannot do. Mr. Rocklops, the same question for you. Anything catching your eye in the universe of VIX ETPs this week? And B, would you have danced with the devil in the pale moonlight of these April 12s, or would you have taken some off the table, sir?
Generally, I take things off the table. I put a stop. I've learned from the hard way in VIX or any of the vol products. So I personally did not do it, but that's how I do it now. It makes my life a lot better. So, and anything this week, anytime you have a rally in VIX and it fails, my eye always goes to like SVIX as a pop. So I bought some SVIX calls this week, and as much as the vol curve, freaks me out a little bit, I do like pairing like a cheap VIX call with SVIX because I just make the duration on the SVIX a little longer. Because that way, if we have that extended vol decline, those calls can ramp up a little bit. So, again, there's opportunity here. It might not be how everybody else looks at it, but I think when you're at all-time highs and vol and the vol products is zero, you would be remiss not to participate in that a little bit. That's my 2 cents on that one.
Indeed. And speaking of dancing with the devil, we all dance with the devil when it comes to the crystal ball. So let's get to it.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Crystal Ball, the portion of the show where we all dance with that devil in the pale moonlight, aka VIX, and see if we can wrestle it to the ground for an upcoming week. Really quickly, let's run through some stuff here before we get to that really quickly. Listener mail, we got a question for you here, Andrew, about working upside limit orders in VIX. We'll have to save it for a future show. We're already coming up against it. Really quickly, we asked you about Apple and Tesla beginning of the week trading $188. Which one would you rather buy? Gun to your head. 38.5% going for Apple, 29.5% for Tesla. VIX creeping up, though, 20.5% at number 3, and crypto taking up the rear at 11.5%. You got a few hours left, so if you listen on the podcast, you might have a chance, but probably better off listening live. We're just voting throughout the week at Options is the place to go. A long way around to saying on the show last week, it was myself, it was the greasiest of meatballs, who was busy throwing everybody under the bus, and Mr. Steve Sosnick from IB. Steve was at a 1340 in VIX. I was at a 12 double, and the meatball was doing his palindromic nonsense at 1331. And spoiler alert, that little bit of a sell-off we were talking about going into start of the show, it seems like that has mostly mitigated. VIX is back to unched, slightly up about 0.05% right now. Sorry, VIX. SPX is slightly unched. VIX is at about a 1387 or so, which means, once again, no winner chicken dinner this week. The closest was Steve, though. He was about close to half a point away, so not quite within our margin of victory. But that does mean, Mr. Rich, you get the dubious honor of going first. I'm going to give you a twofer guest this week because you didn't join us towards the end of the year last year, where everyone got to make their VIX picks for the end of the year as well. So you get to do double duty this week. First off, what is your prediction for VIX this time next week? And then B, maybe I'll let you wait till after Andrew goes. You can think about it a little bit. You're also going to need to come up with a VIX closing print prediction for the end of the year, sir. Have at it.
Okay, yeah, I'll definitely want to wait till after I hear what the Rock Lobster has to say about. So before I give you my closing for the year, but I think for next week, I'm gonna shorten week, etc. I think we're gonna maybe be I don't know. I'm gonna go with something on the order of 14.25.
Interesting, Mr. Rock Lobster. Same question for you, sir. What are you feeling for this time next week?
What am I feeling for this time next week? I know the vol curve wants me to say we go higher, but I also know that could swing either way. And I just don't believe this market ever wants to sell off, no matter how bad the news. So I'm gonna say 12.99 for next week.
Look at you throwing me a curveball there. 12.9. I gotta say, when Rich went 14.25, I was kind of lurking in some kind of territory like that as well. So I'm not quite that high. I was thinking more 14.05, but I want to give him a little bit of breathing room. So I'm gonna say, we just ticked 13.85. I'm going to maybe say kind of unched on the week. I'm going to say 13.85 for this time. So that's your mark of this time next week. Andrew got a 12 handle, if ever so briefly, next week. Rich at a 14.25. I give him a little bit of breathing room. Nice host that I am at 13.85. Mr. Rich, the time has come, sir. What are you feeling for this time, the end of the year for VIX? And then B, that music means we come to the end of the show. So if folks want to check out all of your insight in between appearances on Vol Views, where should they go? What should they do?
First of all, end of year guess, I'm going to say 1999. I think we're going to party like 1999 in the VIX this year.
We're keeping the vol all the way through the end of the year. Interesting.
Yeah, I do. I'm a big believer that we're seeing with the inverted yield curve with the real Fed funds, both are good predictors for me. That tells me we're going to have a more volatile year. So I think we'll see higher levels than that this year, but I think we're going to end the year on a higher volatility basis. We've got an election at the end of the year too. I just think there's a lot of moving parts. And just to kind of where people can find me, it's always CME Group, Excel with Options, talking about all the different asset classes out there, trying to come up with some option trading ideas for you and a way to express your view. You can find me in my Substack, which is called Stay Vigilant, or you can always find me on LinkedIn, where I'm putting out charts every day.
There you go. Give him a follow over there. Stay vigilant at EXCELL, EXCELL. Richard, all one word, no spaces or underscores on Twitter as well. And, of course, a lot of good stuff going up over there for CME all the time. And he pops up occasionally on Twifo as well, so stay tuned for that. And Mr. Rock Lobster, sir, if folks want some pit goodness in their lives, where should they go? What should they do?
Run over to optionpit.com. If you heard this here show, you get 10% off anything. Mark just launched Trade Zone for teaching people how to invest in these big cap stocks with little tiny dollars instead of big dollars. That's coming out right now. So 888-TRADE-01. And I will see you on Oddities later. I'm looking forward to the show this week, I have to say.
Unlike usual, when you kind of have to be dragged, kicking and screaming onto it. No, it's going to be a fun one this week. I'm kidding. The Rock Lobster brings the heat. Stay tuned for that. If you want to check that out for yourselves, listeners, head on over to theoptionsinsider.com/pro. That's the place to go to get access to all the Oddities fun, which is coming up a little bit after this show. If you don't go there, of course, unfortunately, that's going to do it for your broadcast week with us this week. Hope you had a good week. If you missed anything, it's all there for you on the network feed to enjoy at your leisure. You might need it. Holiday, maybe you're getting a little antsy, your mouse finger getting a little itchy on Monday because you can't trade. Tune into some content maybe you missed on the network feed, or maybe head on over to theoptionsinsider.com/pro. 300 plus episodes waiting there for you. Just had Scott Nations in the hot seat answering a lot of your vol questions recently. Of course, Options Oddities of your week. Great giveaways, live streams so you could heckle the Rock Lobster and everybody else going on out there, and a whole bunch more. Theoptionsinsider.com/pro. Got to get on out of here now. Back again for Options Oddities and a little bit exclusively for the pro folks. No shows on Monday, long holiday weekend, listeners. So enjoy your respite from trading, unfortunately from the option block and crypto as well. Back again next week with our usual array of content all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.